Hey there, this is Tax Help. We help business owners reduce tax liabilities, clean up their accounting, and stay out of trouble with the IRS. Today we're talking about something that sounds harmless, even helpful, but in reality it's quietly draining business owners every single month. Having too many business bank and credit card accounts. We see this all the time when we sit down with small businesses. They think more accounts equals more control, but what it actually equals is more confusion, more costs, and more missed opportunities. Stick with us, because by the end of this video you'll know exactly why extra accounts hurt your business, how to know if you've got too many. Here are 6 key improvements to help you simplify your business banking and save more money. Improvement number 1. Avoid too many accounts. Let's start with a scenario we see constantly. You open your first business checking account, great. Then you think, maybe I should keep payroll separate. So you open a second, then another for supplies, then you add a few credit cards, one for travel, one for online orders, maybe even one just to rack up points. Before you know it, you've got 6, 7, sometimes even 10 accounts running. On the surface, that might feel organized. You tell yourself, this way I'll know exactly what's being spent where. But here's the truth. The more accounts you add, the more complexity you create. And complexity is expensive. Think about it this way. More logins, more statements, more transactions to track, more chances for something to fall through the cracks. Even if the bank doesn't charge you, those accounts are not free. They're costing you in time, attention, and hidden money leaks. Improvement number 2, avoid hidden costs stack up. Now let's break this down into 4 specific costs that extra accounts create. Number 1, more time, more money. When you reconcile your books each month, every single account has to be reviewed. Every deposit, every charge, every transfer. If you've got 3 accounts with 250 transactions, that's manageable. But with 7 accounts, you could be looking at 600, 700 transactions. That's triple the work. If you're paying a bookkeeper, they charge per hour or per transaction. If you're doing it yourself, that's hours of your life you'll never get back. And time is money. Imagine what else you could be doing with that time. Finding new clients, serving patients, or just relaxing with your family. Number 2, missed tax deductions. Here's a sneaky one. When expenses are spread across too many accounts, things get lost. That $40 business lunch on your travel card? Forgotten? That subscription billed to an old checking account? Overlooked. It only takes a handful of missed expenses each month to lose thousands in deductions each year, and the IRS won't remind you, they'll just happily take the extra tax money. Number 3, bank fees and service charges. Even so-called free accounts have strings attached. Some require a minimum balance, some charge overdraft fees, some hit you with wire transfer charges. One fee doesn't sound like much, $10 here, $15 there. But multiply that by 6 accounts, and suddenly you're wasting $600, $800 a year just for the privilege of extra accounts. Number 4, harder to spot fraud or errors. Here's the big one nobody thinks about. With multiple accounts, you've got multiple statements. The more paper or PDFs you have to review, the easier it is to miss fraudulent charges or banking errors. If you're only checking balances once a month, you may not catch a problem until it's too late. And fraud caught late is fraud that costs you. Improvement number 3, fewer accounts, more savings. Let's imagine Sarah, who runs a small clinic. She thinks she's being smart by opening 5 bank accounts and 3 credit cards. But here's what really happens. Each month, Sarah spends 6 hours sorting through 500 plus transactions. She misses 2 $200 deductions because they were hidden in different accounts. She pays $30 in bank fees across 3 accounts she barely uses. That's nearly $3,000 a year wasted, not counting the stress and time. Now imagine Sarah consolidates to just 2 bank accounts and 1 card. She cuts reconciliation time in half, her bookkeeping bill drops, she captures every deduction, and the fees disappear. That's the difference between feeling organized and actually being efficient. Improvement number 4, use extra accounts wisely. Now don't get us wrong, multiple accounts aren't always bad. Sometimes they're necessary and smart. Examples. Number 1, use your savings account for your taxes. Instead of opening a brand new account just for taxes, simply use the savings account you already have. Each time you get paid, set aside 25% to 30% into that account. When tax time comes, just transfer the money into your operating or checking account to make the payment. This way, you're protected from accidentally spending it, and you avoid the stress of scrambling for cash later. Number 2, a credit card strictly for business travel to separate those expenses. Another good strategy is to dedicate 1 credit card just for business travel. Things like flights, hotels, rental cars, and meals on the road. Number 3, separate accounts if you own multiple LLCs or real estate investments. But the key is strategy and purpose. Every account should exist for a reason, not just because it feels organized. Improvement number 5, simplify your setup. Here's a simple step-by-step process to clean up your accounts and make your life easier. Number 1. List everything first. Write down every single business account and card you currently have. That means checking, savings, credit cards, even that old business account you opened 3 years ago and never closed. You'd be surprised how many owners forget about accounts that still have activity. For example, one healthcare owner I worked with had 8 different accounts. 2 of them still had automatic payments hitting every month, and she had no idea until we sat down and listed them all out. Number 2. Identify overlaps. Next, ask yourself, do 2 or more accounts basically do the same thing? Maybe you opened one checking account for payroll, another for supplies, and another just because your banker suggested it. If they're all for operating expenses, you don't need 3 accounts doing the same job. Combine them into one. Number 3. Spot low-use accounts. Now look for accounts that barely get used. If an account only has a handful of transactions each month, it's usually not worth the extra bookkeeping and reconciliation costs. For instance, I've seen owners keep a separate account just for one vendor with maybe 2 transactions a month. That's adding work and sometimes fees for almost no benefit. Number 4. Consolidate with purpose. Once you know what's redundant and what's low use, it's time to simplify. Aim for a lean structure. One main operating account for all business income and expenses. One savings account just for taxes or reserves. This prevents nasty surprises when tax season hits. One business credit card for flexibility, emergencies, and points. That's it. Clean, simple, and easy to manage. Number 5. Update your system. Finally, once you consolidate, don't forget the housekeeping. Tell your bookkeeper about the changes. Update your accounting software so transactions flow correctly. And make sure your vendors and clients have your new payment details. The last thing you want is a missed payment just because the old account got shut down without notice. Improvement number 6. Get a financial checkup. If you're watching this and thinking, that sounds like me, you're not alone. Most business owners are carrying extra accounts without realizing how much it's costing them. That's why we offer a tax and financial health assessment. In just 2 weeks, we'll review your bank accounts, your books, and your tax returns. You'll walk away with a clear plan, whether you're overpaying for bookkeeping, missing deductions, or carrying unnecessary accounts. Let's recap the top 6 keys. Improvement number 1. Avoid too many accounts. Improvement number 2. Avoid hidden cost stack up. Improvement number 3. Fewer accounts, more savings. Improvement number 4. Use extra accounts wisely. Improvement number 5. Simplify your setup. Improvement number 6. Get a financial checkup. Thanks for watching. Remember, every extra account you carry is money slipping through the cracks. Simplify, save, and put those dollars back into growing your business. If you found this helpful, hit like, subscribe, and share it with another business owner who needs to hear this. See you in the next one.